Hey guys, hope you had an amazing day. Uh, I hope you guys are enjoying the weekend because this week has been very terrible, following the massive sell-off in the crypto market, which has made it very bad for everyone. And I think there's so much liquidation, a lot of drawdowns, and portfolios in big red. But let's hope the next week gets better. So, guys, if you're just doing it for the first time, if you find this kind of helpful, please like, share, and subscribe. And if you're not yet in our Discord platform, we encourage you guys to subscribe and join our Discord platform where you get access to daily live trades and also educational content, which will be very helpful for you if you're still navigating your way through the Forex market. That being said, let's get on chat. So the first analysis we're going to be making today will be on gold, and this is a continuation chart from our last two charts. And if you've been following us, you should observe that the chart is slightly different from what we had last week, and that's because we changed our strategy following the last trade, which we had SL hit, and yeah, that was terrible. But yeah. So today we're going to be looking at chart from a more from a different perspective, using the chart patterns instead of the Fibonacci retracement zones, because um, last week we saw what happened after Donald Trump did the whole tariff threat on Canada and Mexico, and that affected the market a lot. So we saw a good break above key resistance level, which was at 2800, and it went high to make new highs as at 2890, which we saw last week at the close of the market on Friday. And this is a very this is the new all-time high for gold for years. I think since inception. This is like one of the highest prices gold has ever been at, and it's a ridiculously high price. And this is basically due to the global trade tension, the global trade war, and all the geopolitical tension. I'm not going to get too much into fundamentals because some things are not making sense, or some things are actually making sense. So, in technical aspect, we're just going to focus more on that. So here we can see what happened is that since last October, since the last time we made the first major high at 2790, we saw gold enter into a corrective state, which we can see here. It was forming in a symmetrical triangle, and the triangle ended as a January 15th. We had a breakout and a retest. Now, so we're expecting it to rebound, for a short-term correction, after hitting that 2780 for the second time, but Trump truths came in, and yeah, we saw something very surprising in the market where we saw gold break above 2800 and kept ascending higher to make new highs. Now, we can't tell if the highs have been achieved yet, or we could still see price push higher. But the key metrics in trading symmetrical triangles, which I'm going to share with you guys from NFX membership platform. So here we can see this similar setup to what we have over there. Now, there's a key metric when we trade in symmetrical triangles. Each of the corrective continuation charts often goes twice the height of the triangle. So what we have here is the preceding uptrend. We get the triangle formation, the height of the triangle, and then we'll put that at the breakout entry. That's how we usually calculate the TP for a corrective, for a continuation a chart pattern like what we have here. So we're going to apply same thing to what we have here on our chart. If you look closely, they are very similar in terms of market structure. So that's what we're going to be doing here. So we're going to take the height of this triangle, and I'm going to use this to estimate the possibility for us knowing when this current trade will likely be timed out. So if we put that here at our breakout angles, that tells us that there's a possibility for us to see price, over up to this point as our target profit. So we can't really say the market has come to a halt here, but there's a common thing with gold is whenever it makes a new high, it tends to drop. So if this new high has been fully maxed out, we cannot tell right now until we get a clear formation for a reversal, and that's going to give us a better stance on when to take a trade. Now, I'm not literally going to be jumping into any buy trade anytime soon because right now I'm on the lookout. So I'm just going to wait for the bullish move to max out, and then we could see a very heavy correction because this is going to fall like water. So we could see the bull could keep pushing the market. I'm gonna open the stochastic RSI just to keep track of the volume. So now we can see market is still way much oversold, and I think this will likely continue. But I'm a bit optimistic, and I'm hoping we could get a divergence anytime soon. And this week, I'm hoping we could see the market get maxed out, and after that, then we could expect a possible correction, a possible correction that will take us way back down to this same 2880 or 2870 level again before we could see any further bullish continuation or a bearish turnaround. So for now, we are not so certain about that yet until the market plays out, and we just have to watch the market and let it play out how it chooses to play out. So a key area of focus I'm going to be very watchful of would be this level, and that will be around 2960. So it's very possible that gold could test $3,000. So that would be really, really heavy for gold, but that's a possibility. We will see go test this level, but no certainty right now. We'll just keep watching what the market's gonna do, and when that happens, then we're gonna see a flash crash, a very heavy flash crash, and that's where I'll be looking towards taking any future trade, because market right now is in a steepy market. It's just going up in a parabolic form, which is not very healthy, and also, if we take a simple moving average, we could see that price is way above the moving average. So I'm gonna use the 200-day moving average since we're on a daily chat, and show you guys how to do this. So if we have the 200-day moving average, we see price is way above the moving average. So there's a clear possibility that we see price tend to come way back lower towards this range, so it can merge or stay a bit closer to our moving average. For now, guys, that's all for gold. And right now we're in an open market, and it's if you're not already in the buy position on this trade, then there's no point trying to jump into the trade, because we can't really tell what will happen at this point. We're just midway towards the expected target, and until that is achieved, we can tell what will happen. So for now, recommend that if you're not in the trade already, if you're not in the buy trade already, just stay out of the trade and patiently wait to see this trade max out, and then we should be on the lookout for the sell, because this is going to drop really, really hard, and that should be a very good time for us to get a sell entry, and it's more safer trade for us. All right, guys, that's going to be all for gold. Next on our chat would be US oil. Now, for US oil, generally we saw what happened last week where the news report was released. I'm going to quickly see if I can put that out from our economic calendar, and we saw the result from this week economic calendar, and it was not good. It was not good at all. On Wednesday, I think, yeah. So we saw the crude oil inventory. It was about 8 million. Yeah. So this is it. So we saw a change of 8 million barrels. That was too much. I think the last time we saw that kind of report was over a year ago, probably May last year or something like that. So this is like ridiculous, and this is just like a month after Trump's inauguration. So Trump has always been, bearish on crude. He always wanted to get us to get a more lower crude price, and I think he's gonna do everything in his power to make sure that he pushes the price of crude to a very, very low amount. So I'm going to be more careful with crude, and right now we can see crude is actually descending towards the yearly low, the yearly support, and that's a very strong support. I'm going to be watchful to see what happens when we test this level again. You can see this has been up to since 2021, and I'm pretty sure this is likely going to hold, because, well, even with the war this past few years, we haven't seen crude drop below this level. So I'm pretty sure we could see price sustain at this level. But for now, no certainty. We're going to watch now for next week. This Wednesday's crude oil inventory reports, and that should give us a clear idea of what the market will be doing. So market has been actually trying to hold its stance despite the heavy supply on the crude oil inventory reports. So on the hourly time frame, we could see that crude has been in the descending channel, and it has been since January. So this is approaching the apex. We're likely going to touch the lows of this channel, and which is going to coincide with the yellow support zone. And when this happens, then most likely we could see price bounce off or price break below. So for now, the chart is very rough because market's not really, really flowing as expected, and we're getting so much alternatives in the market. So we would like to see lower prices for crude, or we could see price that's recovering and bounce off, like we could see on the daily chart. But more or less, I think we should see price bounce off. except some mysterious, new production and consumption reduces in the US. Except we get more production, and that could actually, yeah, really push price way back, way down. But for now, we're not sure about that, so we'll just keep on the lookout. On technical aspects, we're approaching the support zone, and this is a very key. This is a key area which we're going to pay a lot of attention to in opening any possible buy position. But to that is achieved, we're not going to be taking any trade. We're going to be watching the market closely. So the last we're going to be looking at is Bitcoin, and not really much has changed from our Bitcoin chat. It's still the same thing as what we had last week. The market has been in our ranging zone. It's been oscillating between 90K and 110K, which is expected, but it has lingered a little bit longer than expected. Um, I think everyone was expecting January 20th to be like a very bullish day for crypto, but it turns out that reality differs a lot from expectations. And right now, we're just seeing the market still ranging between these two zones, and I think it may likely range a little more. Probably February ending, we could see some new bullish momentum because I don't think we have so much time left for the end of this rally. Rally should be wrapping up by April, by October this year maximum, I think. We shouldn't see price linger that much. So I'm hoping that this February we should see more bullish movement for Bitcoin, and we should see price break above our resistance level, which will be at about 110K, and start aiming forward towards our next Fibonacci trend resistance, which will be at 150K. But till then, till the breaker is confirmed, we can say this might continue to range for quite a bit longer. So this is of course, our long-term Bitcoin outlook, and we can see that yeah, price is still within this zone. This is exactly what we have right now. Excuse me, and I'm expecting this to max out by October. So by October, I'm expecting us to see a significantly higher price. So till then, one cannot say anything. So for now, guys, if you're gonna be if you're looking towards getting a buy on Bitcoin, it's best you either trade the range, the swings, and buy probably at 90K, sell at on the 10K, under 7K, that price gaps. So, but if you're gonna look at a potential long-term trade, then it's better you wait till the break at above 110K. But for the meantime, you can of course take advantage of the range in chat and benefit from that as well. So I think we have some examples of the range chart here in our chat. So if you guys want to learn more about how to trade the range chart, you can subscribe to our membership platform, and you can get access to more of these chat formations and how to trade with them. It's very, very helpful, guys. All right, guys, that will be all for today's analysis. If it's going to be helpful, please like, share, and subscribe. Leave a comment in the section below, and I'll see you guys in the Discord community. Cheers, guys. Have a great week.